All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for February 27th, 2023. All right, we'll start as usual with the swing trade portfolio. So we're looking at these are all 30-minute charts, and we're just looking at standard patterns. This is Alcoa. So we stayed out of this thing on Friday, and today we got a continuation pattern off the SSC. Took a standard wrist box to the bottom of the dragon. This thing closed really well, and we're holding plus 2R. That's a good position to be in at the end of the day to decide if you want to hold that overnight. It's a better position to be in if you had intraday traded that on the 3-minute bars with a smaller wrist box, and then offload the intraday position and just hold the regular swing trade position overnight. And that's what we did in Alcoa. But that's a really strong move, and there's still room to go to the top of the dragon and the top of the RL10. So that's looking pretty good. I mean, I wouldn't be surprised to see these two peaks looking for some resistance around 49.50. So if we get a nice move tomorrow, I will put the intraday position back on here. But then if it starts failing around 49.50, that round number, then that's where I will terminate both the intraday and possibly the swing position, because I wouldn't mind that as a 2-day move in a swing. So Alcoa, all good. Cliff was kind of the same thing. We had a bigger gap, but the gap cleared all of these previous peaks in the RL10 and Dragon, so that felt like it was free and clear. And now there's no real resistance in here because this was a straight fail. We don't even get resistance till it's up here near the 5-day high, which is where it got to. I was really tempted just to take 1.5 right there. So we're holding about 1.5R on the swing. Well, all I'm decided to do was just raise my stop to lock in 1R for tomorrow, and hopefully it doesn't gap against us. Now, if it manages to take out this 5-day high, then I would consider adding a second position here for a swing. But I would actually rather see it get above the 10-day high, and so I will probably add a second position north of 21. But I like that CLF and U.S. Steel were both strong in the metals today. Let's just go look at U.S. Steel while we're there. So U.S. Steel had been the strongest swing position before, and on last Friday we had seen Thursday's close, gap down, 1, 2, 3 entry, took that one intraday, and it closed well. So we held that one overnight, over the weekend, and then we were rewarded with a big gap up. So I just took a look at that one as lock in the gap. So we're holding a little over +1 just at this stop loss here, and that gave it room to run. So now if it takes off and I would say breaks above this 5-day high, which was also today's high, I would look at adding another position here. And then now what we have is a reason to pay very close attention to all three of the metals that we're following. So we'd be looking at XME, STX, and XLB as 3 sector ETFs that would give some insight onto what's happening with the metals. But the metals were a really nice play, and what really set that up so well was the big sell-off down to, from the 10-day high, and it finding support on Thursday at a place that had previously held support. So that, in our view, that made that a low risk idea. And then if it had failed below this line, we'd have been short and have been happy to be short. So the metals have been good to us. CVS. So this is at the tail end of a Godzilla. If we take a look at this thing, this has been horrible. And there had been that one nice move up, but then it's been a steady decay. We've been short once, twice, 3 times, and now a 4th time as today it went and broke below the 30-day low, and this thing is just selling horribly. And so I want to move up to the daily just for a moment, if we can, and say, this thing is in position now. Here's the 100. It's at the 150-day low. So this is all about the Godzilla, right? It's at the 150-day, 30-day, 10-day low and failing, and now this whole support level here means 80 is in play, and so now the reasonable target to the downside is 80. But if that fails, the next reasonable target is back here at 75. If that fails, it's 67. So this thing could be in a world of hurt. So longer term, this is one that could be, we might just manage this one on daily charts if we get one more nice move out of this. So I'm going to dial back to the 30-minute and just say, you know what? After 4 successful short side trades, there was one previously, then these 2, and then today was just the RL10 rolled over. You got the RLXD happening, so as soon as price broke through the dragon, I took that as a collapsing dragon. It closed poorly, and I was happy to take a 2R gift, so that's 1 unit of risk. I was happy to cash 2R, knowing that tomorrow I'll be ready to just pile right back on this thing to the downside. But I wanted to minimize my overnight risk. I'll keep the metals long. This one I considered short, but I would rather have the 2R in hand on this one, to be honest. Devon Energy, we've been long this thing for a while. It is still grinding along. And now with a closure here, we're about +1 in hand. I'm going to lock in that gain tomorrow. So today's low will be tomorrow's stop loss. This high right here would be a second position long, because it's had 5 days to fail. It hasn't. It's maintained this little burst of energy, and then if it can clear this, then it should be able to get up to 56.50 or even 57.50, and I'm willing to give that a try. So Devon Energy. EA, we took the 1-day gift trade here. Did not engage on Friday. Today, there was a gap up. We took the MMRB move off the low. Standard risk box. This thing closed pretty well at 111. So we're holding about 1.5 on that one. So that feels pretty good. And all I'm going to do for tomorrow is raise my stop to about here, to about the PSAR. And then if it can take out this local peak here, I would consider adding at a second position, because I think, the target would be, 112 and some change. So I would look at a second position right about here. Emerging markets, just noticing that it held support near the 10-day and the 30-day low. I had a lot of things going on, span of control rise with the metals, and so I just kind of noticed that it had broken through. Didn't really miss much, but the fact that it did not retrace suggests that it may be able to close this gap, and now a target of 39.25 is within range. and that would be an interesting intraday trade to start off next session if that is still there. So that's got a good potential. Mexico, on the other hand, on Friday, gave us the PSAR flip, and so we got in just before the close with a stop down here at the belly of the RL10 and the PSAR. So there's our standard risk. The overnight or over the weekend gap was to here, and it closed. It was closing pretty well, and in the last minute gave up that little bit. So all I'm going to do on that one is just raise my stop tomorrow to lock in no lose plus dinner for two. I don't want to lose money on that trade. But it's at a critical state right here. It's got to get through that triple top to be interesting. So if it opens up in this region and takes off through there, I could be tempted. I might have to wait until it gets above 58.50 and clears all this. In fact, that's probably a better idea. But I'll think some more on that tonight, whether I want to add immediately or wait for that to break up. My gut tells me right here. But because it's Mexico, we can trade that one on 3 minutes and then get carried along by the intraday momentum. Brazil was not as persuasive as Mexico. It's still kind of choppy. The only thing going for it is it did not fail below 27.50. So let's see what it does in here tomorrow. It's an intraday 3 minute frog all the time, frog champion, but it's not interesting on a swing yet. Still too volatile. Intel was a no trade today, although there was on the 3 minute there was a gap up and then a sell off during the day. So there was actually a 2% move to the downside from here. The fact that it did not fail below this is the only promising note. This one would be an auto short if it breaks below 24.91. I'm ready to get short that one in a hurry. I'm going to be tempted to take the Kata 2 and Emerging Dragon right here tomorrow, though. If this is able to resist that support and just take off, I think I want to buy it either here, but not later than there. So we'll see how that goes. The reason to wait for the second one would be it's clearing all of this RL10 business. So maybe that's just a better play. Wait for it to clear today's high, and then you could probably play one. And then it's a long, uninterrupted run all the way up to the 5-day high. So there's room for it to expand after the sell-off. International paper, just stalking. I do sort of like this, the price action from Friday and then into today. There's a surge. It held above the previous bellies of the RL10, so there's a Kata 2 action in here. I could be persuaded. Low priority, but not impossible. But flat right now. Same with real estate. The big gap up could not hold, and it sold off and then held support just above the previous support level, holding it right at the PSAR, although the PSAR did flip. I'm ready to get short here on a break of the 10-day low, and I could be persuaded, I think north of the Dragon or north of the RL10. If it can hold tomorrow and break through those, I'd be happy to be long. McDonald's, we scratched the short, so this is one where we had some money in hand on Friday and was trying to hold on for more, and then it gapped up to here, so better just to scratch it. It had a nice little recovery in the afternoon, but there's other better ones I think in the ETFs. Still problematic. Marijuana, this was a Kata 2 short, just straight up in the usual way. It's been horrible, horrible, horrible. And then it broke down through the dragon today. So just pick up the short with a tight risk box. That's that same standard risk. And it's 2R in hand. 1, 2. So this thing's +2 and dropping like a stone. And it could get down to 6 without any trouble. Clean energy. This had a short that we held over the weekend. And we're in the money, but it gapped up against us, so we just got out and took the minus 0.3. This was not persuasive to the upside. It didn't fail further, but it really never got above these resistance levels. So this one, no hurry. It deserves watching. I have an alert set, so if it breaks above 43.10, I'll be prepared on it. Maybe 43.40. Oops, 43.40 is the auto purchase on it, and then the target is 44.50. So that would be a $1.20 move, meaning if you can manage a 40-cent risk, you can have a 3-to-1 mechanical trade to here. So that's reasonable on the 3-minute chart. Treasuries, kind of dead money. This is a fence sitter. You have a high, you have a low in this channel, and it closed right in the middle with pure sideways today. So I think you could even put a risk box like this and be ready on the 3-minute chart to be long here or short here, and then using the space in the middle as your breakout box, your risk box. And then if it breaks out of today's range, you have confirmation of a directional move. But this one would get you started intraday on 3 minutes on treasuries. Tesla, I had thought hard about the PSAR flip on Friday with a risk box here. Elected not to take it, so when the gap up happened, I didn't want to chase. I was on the metals, and it was span of control. But this closed pretty well, and now it's clear of the previous resistance, and the next target's going to be up here around 216. That one is tradable on that breakout with about a $2 risk. I like that. I also like the short, so this is a high priority compound critical state. And then we already looked at U.S. Steel. So that's a quick look at the swing portfolio in the usual way. Check or hold. I'm putting all of these into the advanced swing course as a sample portfolio management, so you can have all the videos in one series if you ever want to go back and study that. Because why not? All right, let's go to sniper trade of the day. So now we're looking at a symbol. This is AA on 3-minute. You'll recall that we also turned this one into a swing trade. So here was Friday's close. Here was the gap up. Here's the OR3. It broke down first, so we got short with a standard risk box. It immediately reversed, so we take the -1R loss, stop and reverse. Now the same risk box in play, and now my stop is here with this risk box. Check or hold. It moves out nicely right from that reversal. So about 1 or 2 bars in, you could move your stop up and get all of your risk out. Now you're in the no lose plus dinner for two mode. You've locked in that gain. And now it's simply a science project to see how much you can earn from this. I would not be offended if you just decided to take that exit right there and make that gain, because that's a little over 1R. It's a 1-2 exit, and it's at the edge of the dragon. So there's nothing wrong with that exit. And end up getting approximately the same exit when the PSAR kicks us out. So, you know. And now we notice the the peak of the RL10, the peak of the dragon. We see it holding support right here. So what I'm really doing now is stalking inside this area for an exit, or I'm sorry, for an entry. If I am able to get an entry inside this region, what would we call that pattern? And where would we draw the risk box? So we would draw the risk box probably down to here, to the belly of the RL10. And that's pretty close to the MMRB. Even if we drew it a little further, it probably looks like that. And then if we can get price as it crosses the dragon or crosses the PSAR, then we would call that a COTA 2, because we would have had a higher low. And then if it breaks above the RL10, then we would call that an emerging dragon. And that means we can think of this space in here between a tentative entry at the green line and the confirmation of the move at the blue line. We would just call this the tactical space. And all we're trying to do in the tactical space is get our stop raised to above the entry, because that would allow us to get oops, that should be red. That allows us to lock in just this little wedge of gains right here. Okay, so that's how I'm looking at stalking this entry. You get the standard entry. The regression line has crossed the dragon. Now, the technical signal to get out of this would be if price fails below the PSAR, which is equal to the belly of that dragon. But the risk box, the 1R loss, would be the standard risk box. So this would be the technical signal to get out. That's the minus 1R loss. And the bottom line is, if this thing does roll over immediately and takes out the technical signal, that's when you get out. So you're going to take like a minus 0.8R instead of waiting to see a full 1R loss, because the signal that the move is over is if the statistical support level breaks. So don't wait longer just because it's a 1R loss. Well, I want to wait and give it a full 1R. No, the technical signal is the one that gets you out. Monkeys around a little bit. After the second rollover, it basically times out with the PSAR. So there's 1 unit of risk, 1 unit of reward. That's about +1. This one was also about +1. This one was -1. So we're about net +1 so far. Check or hold. COTA 2 re-entry. It's getting into the afternoon, so we take the no lose plus dinner for 2 exit, and then it reverses immediately. So just get right back in. That's another COTA 2. And that one gives about 1R. So the net for the day is about +2, because this -1 is offset by that +1, and you get +1, a fraction, and +1, so you net about +2 for the day. And if I recall, that was it. Yeah, and then it closes in a pretty positive manner, and then we just keep the swing portion of that move and sell off, because we had one day position on here, and then when I make that exit, I'm done for the day, so I sell 80% of it and then keep 1/5 of it, keep 20% as the swing position. And so that's 1 unit of risk, $400, and that's paid for by the 2R that we made in it intraday. So that's a case where the intraday is funding the overnight risk, and that reduces risk to my core capital. All right, let's see how the team did today. Here's Tim in Devon Energy on the 3 minutes. Here's the OR3 entry. Could have been here. There was a trade available. He waits for the PSAR flip, and I would treat that as an SSC. Gets paid a fraction. There was a potential short, he notices, but the Z3 lines are pinching a little bit. I wouldn't be offended if you took that one short. If you did, then you'd have to get out in here. And then, so there was just a fractional gain today. Cliff Natural Resources, he does the OR3, gets paid quickly, gets paid a fraction here on the short. There just wasn't much room in this after that morning move. So he gets 0.4 on that one. Good looking work. Intel. Now, Intel's been so weak that I want you to really, you got to remember that the weakness of Intel, when it can no longer get higher twice and then breaks through the dragon, and there's a PSAR flip, and it's crossing the VWAP, and there's your move. Intel, I'm sorry, that was Microsoft. Intel here, even better, big gap up, crashes through the dragon and the VWAP, and there's your move. We gotta nail the kids, but that's you would normally have gotten that one. So Intel should stay on your radar when you see that confluence of indicators. A big gap up, and then it couldn't hold, and then it fails through the dragon and the VWAP and the PSAR flip. That is a screaming short. This is a reasonable effort on the long side. Maybe we could have gotten out a little earlier, but you didn't stick around too long on that one, so that's reasonable. Here's is this Satya? Yeah, Satya on the Alcoa. This is the OR3. He really just takes the COTA 2 entry, gets paid. COTA 2, scratch, COTA 2, scratch, COTA 2, fractional. Probably by those 3 scratches in a row, it misses that one, but still, we'll take 1.8. That's about what I got out of it today, too, so you're doing pretty good on that one. This is Luke with the 5-minute Aussie. So he sees the chop. More importantly, he sees the COTA 2, and then it clears. So he gets long here. I'd like to have seen the PSAR flip or scratch. After 10 bars and the PSAR flip, yeah, I'm probably offended. But I get it. Um, the problem on this one was, this is a money management issue, that it takes time for the RL10 to break through and then PSAR flip, and now you're down here waiting for the PSAR flip. I I'm not that committed to the PSAR flip that I want to give up point 0.7 twice, especially after being almost +1 in hand. Remember, I think we want to go back and revisit what is the average win. If the average win was 1R, we should never let an average win lose money, meaning that you got to at least be here or no lose plus dinner for 2, which means I think a better exit is right about there. But this is a beautiful Kata 2, or a collapsing dragon, I should say. Crushes it. Now on this one, I think there's a possibility for a second position here, because your risk box is here, and now you've probably got 2R in hand. I think there's a potential for another second position there. And I like the 1, 2, 3 overriding the system rules. That's good. PSAR flips, waits for confirmation. I think now you gave it 2 chances to gain, and but you still locked in at least half the win. So I'm pretty happy with that. Let's see, Gary. I need you to start adding the summaries. The daily net. All right, so let's see what we got here. This is Devon on the 3 minutes. There's the OR3. So technically, we could have been short here on a violation of the OR3. Yeah, okay. All right, so you notice that. Okay, so you do get that entry. The good news is it cleared the dragon. So, I mean, but this is, you could actually get that one right there. And then that would turn this into probably 1.5. I like this. It comes down to here and reverses. I like that exit. I also think when it crosses the VWAP, you could be here instead of here. And then when you have that kind of exaggerated move past Z3 and this whole thing is rolling over, yeah, you got to get out at the edge of the dragon. You did pretty well on that. Good short. This one, it's 5 bars in. You've already had this much move, but it's got higher lows. You can't let that thing... Oh, I'm sorry. I missed the dot. All right. Yeah, that's a good one that locks in the no lose plus dinner for 2 years. Reading my mind. That's very good. The earliest you could get in would be here. I don't mind waiting for the PSAR. That's fine. That's a good cut. And then you could be short here at the VWAP instead of down here. And then this would be a scratch instead of a loss. That's pretty good. And then on this one, you've got higher lows. So I think we should be entering when it clears the dragon. And then that is a winning trade instead of a losing trade. This little triangle wedge, that's pretty good at the VWAP. I like that. That's a nice trade. I think this one should have been long here. But still, that's not bad. Pretty good work all around. A few things to tighten up. Woj nets 5 for the day with his usual suspects. Gets a scratch on Devon and then a fractional. Stays out of the chop. Gets a scratch. Misses the Kata 2. There was a Z3 pinch in here, so this breakout with a tight wrist box could have paid in Tesla. Nvidia was a couple scratches, and then makes his money on US Steel in both directions for 4.3 and 4.8 for the day. Good day at work. This was Peter's from last Friday, and he's incorporating the fade stat and the fail stat to start identifying those potential turning points, and that's allowing him to get earlier exits. That's a nice trade there. Good scratch. Good scratch. This is that's about as good as you were probably going to get on that. That's a great entry with a wide stop, and that's nice work. Go to the daily report. Sorry, I thought I had it open. There we go. All right, let's go to dashboard 1. Still in sideways normal, so this is a critical state, ready to go in either direction. A little bit of recovery today off the weakness on 10 days. Still in risk off mode, about 1% above the 200-day moving average. The volatility starting to roll over and head back up. That's a good sign for the long side. Pardon me. Oh, sneaking up on me there. Low range day today. Lots of auto framers available. Couple 5DDs, we like those. IBM, Johnson & Johnson, and Pfizer. I like that Alcoa and Tesla. We're percent winners today. So that's 2 clear targets for tomorrow. We've already got the swing on Alcoa. Tesla I could be persuaded early to get back into. Lots of auto framers in the ETFs. No 5DDs. Got a couple triple screens. A couple 551Ws in Mexico, which I like. And in consumer discretionary, which I like. That is usually a sign that Tesla's in good shape. Standard numbers for the auto framer for those of you doing mechanical framing with end-of-day trades. And the daily squeezes, I'm noticing Microsoft, Disney, Tech, XLK, I like that. So we'll be watching for range expansion as the beginning of directional movement there. Go to the snipers, looking for Godzillas. Here's a couple raging Godzillas, Dish and DPZ, and then some stealthy Godzillas here. Nothing in the tactical symbol set. There's our buddy Electronic Arts enjoying the ride down. And CVS as well. I'm going to keep playing that on the short side, ready to collapse. We like it, we love it, we want more of it. Standard stats, nothing special to jump out at me on the tactical symbol set. The MACD is just telling you how, being dominated in here by the winter. Only Mexico in the summer. And then some U.S. steel here. It's in the summer, but on the low end of the MACD Z-score. That's really a good sign. That means it had a really strong previous move, but the sell-off was strong enough, and now it's starting to resume, but it's still in the summer, but well below the Red River. So that's actually a very good sign for U.S. Steel. So I'm excited about that as a swing trade. The multi-time frame NDX summary. Here's your weaknesses. There's Intel, very weak. Weakness in Microsoft as well. Strength in JP Morgan and Cliff and Tesla and U.S. Steel. So again, that's telling you the signals. Oil exploration and materials, that's all the metals. Metals and mining and the industrials, that's Alcoa, Cliff, U.S. Steel. That's where the strength is. People are buying that sector. Precious metals, silver, and healthcare still weak. Winners and losers are sorting themselves out. And now in the, the Frog Champions Trading Value, the one that has the combination of large average daily percent range plus the reliability of strong frog qualities, you multiply those together and you get that ranking score. So the good traders here, the top 10, Alcoa, Tesla, Clean Energy, Intel, Metals and Mining, Brazil. That's telling you. All right, that's everything we got. We'll get this published and posted and ready to get them tomorrow. Tomorrow night, the Charlie 202, Creativity 202 check-ins at 7 o'clock for the Tuesday night gang. On Patreon for the subscribers, I posted, and for the YouTube subscribers too, I posted about half a dozen snippets from Sunday morning's check-in from Creativity 202, which was just outstanding. The whole video is great, but I wanted to hit the highlights so you can see what you're missing, or at least benefit from the insights. Too good not to share. All right, take good care, and we'll catch you tomorrow.